Welcome back to Benchmark. I'm Anushan Selvaraja. Now we'll take a look at the banking sector's performance. And joining me from Frontier Research is Nimesha Jayakody. Welcome to the show, Nimesha. Now, how has the banking sector performed so far?
Yes, Anushan. So the banks, most of the listed banks, all of them actually, put out their results for the September quarter recently. And if you look at most of the banks, their profit figures are better than it was in the second quarter. So I'll just talk to some of the points that help the banks to achieve this. Particularly if you look at the interest cost, what they have to pay the depositors and what they have to pay on their borrowings, that was very much contained during this third quarter. I think one of the reasons or one of the key factors helping the banks keep it at a contained level is the deposit rate cap, which was in place since last April. The impact of it wasn't felt really during the second quarter of the year, which is quite natural because it takes some time for the effect to come into the books of the banks, because either the fixed deposits need to be renewed or new deposits have to come into place at these new lower rates. And also they didn't really pursue very aggressive deposit growth because the need for funding was very much less than in the previous quarters or previous year. Beyond that, there were certain other things like fee income, which the banks charge for their services, that had gone up a little, and also the credit costs or the impairment charges were very much contained during the third quarter. So those are the factors that help the bank achieve a better profit figure during the third quarter of the year. But overall, if you look at a 9-month period, they haven't really seen profit growth compared to 2018. Another thing, Anushan, is the non-performing loans or the bad loans in general terms that has kept on increasing even during the third quarter.
What are the regulatory changes that are coming to effect and what could we see moving forward?
So the most recent one was the lending rate cap that the central bank imposed on the banks. That was in September. What they wanted the banks to do was to bring down their nominal interest rates by around 200 basis points or 2% by mid-October. So within about 15-20 days they wanted to bring it down by that much. And so there were more criteria, of course, to be achieved by end of the year. So that is still ongoing. And then certain rates on the credit cards and the penalty rates, all of them were to be brought down to a certain level. And with that, the deposit cap was also abolished. So now we are in an environment where it has the lending rate caps. So this regulation, of course, the central bank is trying to bring down the rates to induce credit growth. So looking at that and what's been happening in the country on the macroeconomic front, what we can see is that we'll be moving on to a few months or so of lower interest rates than what it was during, say, last year or so. So essentially, yes, this is a conducive environment for credit growth to take off. But it's not necessarily going to happen in a very prominent way right now. So why I say this is the banks also have to be willing and able to increase their credit growth or the lendings. Particularly the reason for, say, some sort of holding back on this lending growth would be the NPL troubles that they are facing. So banks themselves would not be willing to go on a lending spree, very aggressive lending spree right now, if the loan losses are going to increase.
Now, do you think this would change, Nimesha, because now we've had a change in the leadership of the country, so to speak, and there's also talk about some change coming into the regulatory bodies. So what is your opinion?
Well, if you look at the need for the economy right now, what everyone is talking about, global analysts, local analysts, so it is the need for an economic uplift. So in that sense, this somewhat lower interest rate environment is of course going to prop up economic activity. The political change or the new government, if they are also moving in this path of economic growth, which I believe is the case, they wouldn't want to change things drastically, I suppose, in a way that it would not happen. So I believe this low interest rate environment, or having the need to pick up, having the need to accelerate credit growth, all of that would probably continue to happen, so that the people feel more relief their living standards also improve, with them being able to consume a bit more or invest a bit more in the country.
Thank you very much for joining us, Nimesha.
Thank you, Anusha.
That was Product Head of Frontier Research, Nimesha Jayakody. Thank you for watching Benchmark, and we hope to see you again next time.